ever get that feeling? Like something big is happening, but you can't quite, put your finger on exactly what it is.
Yeah.
Well, that's what we're looking at today. It's Germany,
Okay.
their economy. I mean, for years it was like the powerhouse of Europe, right?
Right.
All that manufacturing, the exports. But lately, not so much.
Yeah, there's definitely been a slowdown, kind of a noticeable one.
Yeah.
And that's exactly what we're going to dig into today.
Yeah, what's going on over there?
We've got some really in-depth analysis here. We're going beyond those surface level explanations.
Right.
We're going to untangle all the different threads, structural issues, global changes, politics, the whole picture.
Okay, so it's complicated.
It is. But by the end of this, we'll understand why Germany is in this position
Yeah.
and what it all means, for the rest of the world.
Perfect. Let's start with those foundational problems.
Okay.
The analyses all say Germany's really reliant on these traditional industries. Cars, machinery, chemicals, kind of like they built this super efficient, well-oiled machine. But then maybe didn't adapt fast enough when things started changing.
Interesting point.
Like, look at the US and the UK. They're more into services and digital stuff, right?
Right. And that reliance on those traditional industries, it became a weakness, when things went haywire with global supply chains.
Because of the pandemic and the war in Ukraine, yeah.
Yeah, exactly.
Yeah.
Germany felt it way more because their industries are so interconnected globally.
Mm-hmm.
And there's this lag in digitalization, too. Government, education, even smaller businesses. It's like they were so good at the old ways, it was hard to shift gears.
It's like they got stuck a bit, yeah. Okay, so that's one problem. Another big one that comes up is a lack of investment.
Okay, yeah. And things like infrastructure, education, digital tech, clean energy, all the stuff you need to thrive in the future.
Right, the analyses are pretty clear about that.
And a lot of it goes back to their fiscal rules. They have this thing called the debt brake.
Debt brake.
It's like a rule written into their constitution. It basically limits how much the government can borrow.
So that keeps their finances stable.
It does. But some argue that it held them back from making the investments they needed, especially when interest rates were low. Like, they could have borrowed cheaply and invested in the future. But the debt brake kind of stopped them.
So stability now, but maybe at the cost of growth later. Kind of a tough trade-off.
It is a dilemma. And to make things even harder, you have all these businesses complaining about, well, too much bureaucracy and regulation.
Right, it came up in all the reports. Like, trying to get anything done in Germany is a nightmare. Wind turbines, new factories, even getting funding.
Exactly. The approval processes are long, the regulations complex, it discourages people from starting new things, makes businesses hesitate to invest.
It's like a constant uphill battle.
Exactly. And that all feeds into the bigger economic picture. Okay, now let's shift gears a bit. Let's talk about something iconic.
Oh, you mean cars?
Yeah, the automotive industry. It's practically synonymous with Germany. Huge part of their economy, employs tons of people. Yeah. But it's facing some major headwinds right now.
Yeah, it's like this giant, but it's struggling to keep up with the times.
Right. I mean, historically, it's been a powerhouse. But this shift to electric vehicles, it seems like it caught them off guard.
So while Tesla was going all in on electric, German car makers were kind of stuck on gas.
Yeah, they were slower to make that transition. And now they're playing catch-up, and it's not easy. The reports talk about outdated software, high production costs, and they're losing market share globally.
Especially in China, right? That was a huge market for them.
Huge. But now Chinese companies like BYD are dominating their own market, and they're becoming global players, too.
And the software thing, that's interesting. I mean, cars are like computers on wheels these days.
Exactly. And that's where German car makers are falling behind. They're great at mechanical engineering, but not so much on the software side. There have been reports of problems, glitches, delays. It's affecting their reputation.
So their old strengths aren't enough anymore. And it's not just what's in the cars. I was reading that some production is actually moving out of Germany.
Yeah, that's a trend we're seeing. With high energy prices, labor costs, taxes, those environmental regulations we talked about.
It's getting too expensive to make things there.
For some companies, yeah. They're looking for cheaper places to operate. Like the U.S. with their Inflation Reduction Act is attracting a lot of investment. And then there's Eastern Europe, Asia.
So Germany's losing its edge.
In some ways, yeah. Okay, so we've got these internal problems. But we also have to look at the global context. I mean, the energy crisis after the war in Ukraine, that must have been a huge shock for Germany.
It was like their Achilles heel, right? All that dependence on Russian gas.
Yeah, exactly. They relied so heavily on it. And when that supply got cut off, energy prices skyrocketed. and that hit their industries hard.
Because so much of their industry is energy intensive.
Exactly. Chemicals, manufacturing, all of that. Their production costs went way up, made them less competitive.
And then there's China. It used to be this massive export market for Germany, but now it's like they've become rivals.
It's a huge shift. China's not just buying German goods anymore, they're making their own. And they're often cheaper and just as good. Plus, you have the whole geopolitical tension, especially with Taiwan, adding to the uncertainty.
So it's a much riskier environment for German businesses.
Absolutely. And then, on top of all that, you have the global rise in interest rates. Central banks are trying to fight inflation, but it makes things harder for everyone.
Makes it more expensive to borrow money, right? For businesses, for consumers.
Right. And that slows down investment and spending. In Germany, it's hitting their real estate sector pretty hard. Construction costs are up, financing is harder to get, and that affects consumer confidence, too.
It's like a chain reaction.
Exactly. And when an economy the size of Germany's slows down, well, it affects everyone.
Yeah, the whole Eurozone feels it.
Especially countries that are closely tied to Germany, through supply chains, like Poland, Czech Republic, Austria, the Netherlands. They all depend on a strong German economy.
And it goes beyond Europe, too. If Germany's not buying as much, it affects exporters all over the world. China, the US, everyone.
Exactly. Less demand from Germany means less demand for goods and services globally. It ripples out everywhere.
So we've got the structural issues, the automotive problems, the global pressures. But the analyses also talk about internal factors, like political decisions, a lack of reform. There's this phrase, political inertia. What does that even mean?
It means basically being slow to change. Like, Germany hasn't kept up with other countries in some key areas. Digitalization of public services, modernizing education, the energy transition. They're lagging behind. And it seems to be a problem no matter who's in power.
So it's deeper than just one government or party.
Right, it's more systemic. And then there's this other phrase, reform fatigue. It's like people are tired of change, even if it's needed.
I can see how that could happen after years of stability.
Exactly. But the world's changing fast, and Germany needs to adapt. And a big part of this whole debate is about the debt brake again. It's like this symbol of fiscal responsibility. But now people are saying it's actually holding them back.
Because they can't borrow enough to invest in the future.
Right. They missed an opportunity when interest rates were low. They could have borrowed cheaply and invested in infrastructure, green technology, all that stuff. But the debt brake wouldn't let them.
So they were too focused on short-term stability, and now they're paying the price.
That's the argument. And then we have the bureaucracy problem again. All that red tape is really hurting their competitiveness.
It's like they're stuck in this web of regulations.
Exactly. The analyses are full of examples. It takes forever to get permits for wind farms, for new factories. Accessing funding is complicated. New regulations keep popping up, like the supply chain law, energy standards for buildings. It's just overwhelming.
It's no wonder businesses are hesitant to invest.
Exactly. And then there's the energy policy. In hindsight, it looks like some major missteps were made.
You mean phasing out nuclear and coal at the same time, and relying so much on Russian gas?
Exactly. They basically left themselves vulnerable. They didn't have a good backup plan for energy. And then the war in Ukraine happened, and their dependence on Russia backfired spectacularly.
Energy prices went through the roof.
And German industry took a huge hit. They just weren't prepared for it.
Okay, and let's not forget about the car industry again. Some of the analysis suggests that maybe they were a bit too comfortable for too long, like they didn't feel the pressure to innovate.
That's a point that's made, yeah. The car industry is very powerful in Germany. They have close ties to the government. And maybe that made them complacent?
So they resisted the shift to electric vehicles.
Some say that, yes.
Yeah.
And they didn't invest enough in other solutions, like public transport or new mobility platforms. Now they're struggling to catch up.
It's a tough spot to be in. Okay, last question. What about the current government? What are they doing about all this?
Well, the current coalition, the SPD, Greens, and FDP, they inherited a lot of these problems.
Yeah, it's not like it's all their fault.
Right. But they're having a hard time finding solutions.
Yeah.
There's a lot of infighting, different priorities. Like the FDP is really committed to the debt brake, so they're blocking investment plans. The Greens want to push through climate policies quickly, but they're facing pushback.
Yeah.
And the SPD is kind of stuck in the middle trying to keep everyone happy.
Oh, it's a mess.
Well, it's definitely a challenge. They're seen as divided, slow-moving, not really effective, and these problems are urgent.
So to sum it all up, Germany's in a really tough spot.
Yeah, it's a mix of internal weaknesses and external pressures.
They relied too much on old industries, didn't invest enough in the future. And then you have the global crises, the energy shock, China's rise, plus their own political missteps.
Exactly. It shows how important it is to be adaptable, to invest strategically, to have strong leadership. Germany's a cautionary tale.
It makes you think, what can we learn from this? What assumptions do we need to challenge? How do we avoid making the same mistakes?
Big questions.
Yeah, definitely something to think about.